What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So Altria just hiked their dividend. This was big news. A lot of dividend investors love Altria stock. I actually sold them for TSLY, and I don't regret it. I'm going to go over a few pros and cons on these guys. I still may rebuy them, but there's some things that are a little cringeworthy with these guys. So I'll do a dividend stock analysis and stock review. And these are one of the high yield dividend stocks that many dividend investors like. So I'll go over the dividend trends as well. A little bit in depth. I'm going to go over these guys as a company. So if you guys are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check Altria stock out right now. So Altria stock is sitting at 44.11. The past 5 years against the S&P, it has done terrible. It's been down 27.61% in the past 5 years to the S&P increase of 57.25%. So I own actually stocks in my IRA, United Health Group. And what I like about United Health Group is it increases its price per share over time. It has increased its dividend and has been very competitive with the S&P 500. This only has one thing: it increases its dividend. Dividend yield is 8.89%. Its PE ratio is 11.59. Average volume is 6.99 million. Market cap is 78.28 billion US dollars. Its year range is 40.35 to 48.11. Its day range is 43.83 to 44.52, and its previous close is 44.22. So I don't own these guys. Again, I mean, this is a good high yield dividend stock. If you like dividend, high yield, if you chase high yield and you like high yield, I still may reconsider buying it, but I just want to go over some things with these guys that kind of raise a little bit of red flags. So let me go over these guys as a company. I find the funniest thing on their website that says moving beyond smoking. They know it's bad, but they're making money. So it's a little ironic, moving beyond smoking. They'll do whatever they can to try to, keep a good reputation that smoking's bad and make you're aware of this and all that. Oh, they know it's harmful to people. So let's go over many of their companies or subsidiaries. So here's some of their Altria companies. This is the U.S. Smokeless Tobacco Company. So in 2009, they joined Altria Group, and today is the most profitable smoke-free company in the United States, with approximately 1 of every 2 most smokeless tobacco consumers buying the USTC brand. USSTC, excuse me. So they have Copenhagen, Copenhagen Pouches, Skull Bandits. So people that like dipping pretty much. Red, Seal, Husky, and Wayman's Best. So here's another one, and I want to go over the John Middleton that they have. I see a lot of people buying this in stores. So in 2007, they become a subsidiary by Altria, and Black & Mild's 2022 full-year volume was 1.73 billion sticks. Black & Mild was the best-selling tipped large machine-made cigar in the U.S. So they have Black & Mild's, Middleton's Cherry Blend, Gold and Mild, Prince Albert. Prince Albert, that's not a good name. Apple, Black & Mild, Carter Hill, Middleton's Cherry Blend, Gold and Mild. I do see people at the gas station buying these a lot. Royal Comfort, Sugar Barrel, Walnut, probably the Black & Mild, Gold. I've seen a lot of people recently in the store buy these. So this is a pretty popular brand. Unfortunately, people, when I've seen most of the people that smoke Black & Milds are people in poor socioeconomic issues. So people that live in bad cities and stuff, or cities in bad areas, like when I go to get gas, these are the people buying that. That's one thing that I've noticed with a lot of Black & Milds. In high school, a lot of us thought we were cool smoking Black & Milds. As well as like early college, we would freak Black & Milds, but I mean, kind of grew out of that. So plus, when you're in the working out, Black & Milds are not a good idea. Another thing is Helix Innovations. This is another one. Altria announced an agreement to acquire 80% ownership of certain companies. This is based in Switzerland. These are nicotine pouches. So they do have a diversification, and Enjoy is the most recent one. On June 1st, 2023, it completed its acquisition of Enjoy Holdings. This is one that's only pod-based e-vapor product with market utilization authorization from the FDA. So I wanted to go over that really quick, just a few of these. So I just want to go over a few companies. I do see a lot of people buying their products in the store, so I just want to be very clear that, you know, these guys do sell a lot of products and they do make a lot of money. But I'm going to go over their revenue trends and a few other things with their revenue, dividend history, earnings per share. I'm going to be a little in depth with these guys in the next 20 seconds. But I want to just make it clear, Altria is a popular dividend stock, and many people buy Altria stock. I see this on X a lot. But there's just a few things that I see that could be problems. Now, the acquisition of Enjoy is huge because they're adapting. I mean, they do have a little bit with Coronos Group, some of their investments that they have. So that's one thing that has them going with the adaptability, because, you know, there are so many educational programs out there. People know that smoking's bad. For my insurance and for my job, I can get a urine test at any point, get pulled aside, and I could, if I fail the test and have a byproduct of nicotine, which is cotinine, which is a tabloid, I can lose my job. So one thing that's hurting these guys is people that work in healthcare. They get nicotine tested for a job. So if you want to have a high-paying job, get a nicotine test, okay? I mean, it's very straightforward. I mean, I myself, as a travel nurse, I get nicotine tested, and I have to get vaccinated. So, okay, I'll take the vaccine and work and make money, so, and not lose my job. So that's kind of common sense. The other thing I see is an issue is now, and I've seen this in the past, with certain insurance companies that work in the hospital, if and this is an idea that may happen, get more popular, is if they cotinine test you, or which is a byproduct of nicotine, a metabolite, and you test positive with your insurance company, they can tell you, you know, you need to do a drug test in X amount of days and this and that. You test positive for that, they may increase your rate. So then there goes your insurance rate. So that's kind of an issue that could happen in the future with nicotine products. I think with the education out there, I mean, I myself, I would not date anyone that smokes. It's just a turnoff for me. I don't want to make out with an ashtray. I'm just being honest with you. I don't want to smell like an ashtray. So, you know, when I see patients admitted to the hospital with COPD exacerbation and they still smoke and they don't care, they wear oxygen and they smell terrible, ugh, you know, I try to tell them, like, all right, here's stuff to bathe right away, because it smells terrible. I mean, that's another turnoff, you know, the smell of that. And don't get me wrong, like, I'll smoke a cigar here and there, but I make sure I shower and I stay away from people, because some people don't like that smoke, and I don't want them to, you know, have the nasty, you know, toxins and metabolites and stuff. So that's one thing that, you know, people prefer not to smoke or not affiliate with smokers or marry smokers. You know, that can be a deal breaker for a lot of people. So let's go over revenue trends and dividend history and earnings per share and a few more things. So one problem I see with Altria is their revenue trends. And I'm going to be a little bit more in depth with you guys, because I want to show you why I haven't bought them yet. So here's annually in millions US dollars revenue. 25,744, 2017, 25,576. I actually had to slow down because I need to get this correct, because usually I'm seeing numbers increase. 2018, 25,364, 2019, 25,110, 2020, 26,153, 2021, 26,013, 2022, 25,096. So I'm going to go a little bit more in depth. So again, what I like with macro trends is it tells you The exact terminology of what revenue is. Revenue is the top line of an income statement from which all costs and expenses are subtracted to arrive at net income. So Altria's annual revenue in 2020 was $26.153 billion, a 4.15 increase from 2019. Altria annual revenue for 2021 was $26.013 billion, a 0.54% decline in 2020. Altria's annual revenue for 2022 was $25.096 billion, a 3.53% decline from 2021. Altria revenue for 12 months ending in June 30th, 2023 was $24.888 billion, a 2.31% decline year over year. Altria's revenue for the quarter ending in June 30th, 2023 was $6.508 billion, a 0.53% decline year over year. So we have a problem right there. So I'm going to jump to the net income of Altria. And again, Macro Trends does a beautiful job explaining what net income is because that's an important factor as well. Net income can be defined as a company's net profit or loss of all revenues, income items, and expenses that have been accounted for. So their annual net income in 2020 was $4.459 billion, a 443% decline from 2019. Their net income in 2021 was $2.464 billion, a 44.74% decline from 2020. And Altria annual net income for 2022 was $5.751 billion, a 133.4% increase from 2021. Altria's net income for 12 months ending in June 30th, 2023 was $6.804 billion, a 290.81% increase year over year. Altria's net income for the quarter ending in June 30th, 2023 was $2.113 billion, a 137.68 increase year over year. So we're going to look at a few more things. And so I'm going to go over just some trends. Altria in 2020, the annual earnings per share was $2.40, a 442.86% decline from 2019. Earnings per share was $1.34 in 2021, a 44.17% decline from 2020. 2022, the annual earnings per share was $3.19, a 138.06% increase from 2021. Altria's earnings per share of the 12 months ending in June 30th, 2023 was $3.81, a 288.78% increase year over year. Altria's earnings per share for the quarter ending in June 30th, 2023 was $1.19, a 142.86% increase year over year. The earnings per share can be defined as a company's net earnings or losses attributable to common shareholders per diluted share base, which includes all convertible securities and debt options and warrants. So that's important. I'm going to go over a few more trends before I jump to dividend history. So I'm going to go over the quarterly financials. In March, this is year to year, 2023, revenue $6.67 billion, down 4.16%. Net income was down 8.78%. Diluted EPS 8.33%. Net profit margin was 26.77%. It was down 4.83%. Operating income was $2.8 billion. It was down 2.85%. That was not good. Net change in cash, negative $117 million. It was down 114.46. June 2023, there was a little bit of an increase. Revenue was up $4.48 billion. It was 4.21%. Net income was $2.12 billion. It was up 137.6%. Diluted EPS was up 142.86%. Net profit margin was 47.23%. It was up 127.94%. Operating income was down. It was at 6.71% down. That was $2.98 billion. The net change in cash was negative $3.05 billion. It was down 10.1%. So the numbers are going up. That's good. Now let's go to their dividend history. So the one thing that I'm looking at with Altria is how can I turbocharge my dividend portfolio and have these dividends like this to buy dividend growth stocks. Can that be a possibility? Yes. This is why I haven't ruled these guys out. So this is their quarterly dividend history starting in 2014, 48 cents to 52 cents. 2015, 57 cents. 2016, 61 cents. 2017, 66 cents. 2018, 70 cents to 80 cents. 2019, it jumped to 84 cents. 2020, it jumped to 86 cents. 2021, it jumped to 90 cents. 2022, it jumped to 94 cents. And then it just recently cracked 98 cents in 2023. They do have a high payout ratio. So that's 76%. So right here, MO's payout ratio currently sits at 76% of its earnings. So that just something to be aware of. Number of dividend increases in the last 5 years is 6. Dividend growth in 5 years is 3.84%. You bought one share, you made $3.76 with an 8.52% dividend yield. So right there, okay, the dividend growth is starting to slow down. It's 3.84%. So that's something to be aware of. They have hiked their dividend. Now, if they jump, look, they went from 94 to 98 cents. They jump to $1. I may consider it. I still have to reevaluate if this is going to be a dividend stock that I'm going to rebuy, because I really like the way TSLY has really distributed its dividend. And I mean, that's the one thing that I'm considering, but I could have TSLY buy Altria, and Altria can start buying dividend growth stocks, because eventually I want to somehow integrate Pepsi and maybe United Healthcare into M1 Finance. I would love to get to 100 shares of Pepsi and or United Healthcare or Prologis. Now, this could be an opportunity to use this dividend income to buy that and integrate them and British American Tobacco into my dividend investing strategy. I sold these guys for TSLY. I mean, I'm going to show you the trends of TSLY real quick. I mean, TSLY is sitting at 1441 right now, and their dividend distribution is, I mean, going over their dividend trends, I mean, at worst, they were 44 cents. So, you know, quarterly, okay, I mean, 44, if you do 0.44, I'm just going to calculate this. 0.44, 44 cents times 3 or 4, let's just say 3, you have $1.32. That was the worst monthly dividend of TSLY. In January, TSLY was 90 cents. 99 cents. In February, it was 90 cents. In March, it was 90 cents. In April, it was 82 cents. In May, that was the worst month. It was 44 cents. So I just did 44 times 3, 0.44, 44 cents times 3, and I got $1.32. So right there, okay, already more than Altria's dividend. And Altria's, see, 14 times 3, that's right around $42. So I'm getting a better bang for my buck. Now, again, there is an expense ratio with TSLY. You know, it's 0.99%. I mean, that's a lot. Almost 1%. Then in June, it was 80 cents. And then July, it was 106. That's already, in July, it was already more than Altria's dividend distribution. That's quarterly. And you got 83 cents. So I just did some basic math as to why I like TSLY better than APLY. I'm sorry, than Altria. That's why I'm just providing my rationales why, for me, I'm just better off buying TSLY. So right now. But if Altria starts cracking $1, then we're going to start talking. But the other issue is with M1 Finance, they haven't added, you know, APLY, NVDY. They will eventually, but they need to get their act together, because I got them to get some of those covered call ETFs on M1 Finance, the Global X ones, but they need to get their act together. And right now, I just like TSLY better than Altria. Now, taxes, that might be a different thing, but it's TSLYs every month, and I'm getting a better bang for my buck. I just want to sum that up. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you guys tomorrow. I may try to squeeze one in tonight, so just be on that notification bell after you subscribe if you're new to this channel. Take care. And I'm going to jump to my disclaimer. So as a reminder, my YouTube channel is for entertainment purposes only. I have a disclaimer in the description of this video as well. And I just want to let you know, investing is a risk, and you can gain money and lose money. So it is best to seek financial advice from a financial advisor, somebody that is certified to give financial advice. I am not certified to give financial advice. I'm not giving financial advice on this YouTube channel. I will never give financial advice unless if I get a certification. I don't plan on doing that. I'm showing you my dividend investing journey. I own TSLY and I'll sell TSLY if something drastically happens. But honestly, for the next 72 hours, I'm going to be owning TSLY, and I highly doubt I will sell TSLY. I do not own any shares of Altria stock. I am watching Altria stock. Maybe I'll buy them in the future, but I am not, considering buying them within the next 72 hours right now. So I just want to be clear to you guys that, I want to do a stock analysis and dividend stock analysis. Just go over these guys as a company a little bit and explain to you why, I'm sticking with TSLY, and TSLY is a better buy for me with Altria, and I'm not giving any financial advice. So I just want to make that clear for you guys. And my videos are free for you, so I just want to let you know. I just show you my dividend investing journey / passive income investing journey, and my strategies are very transparent, so I don't charge you anything. These are all free for you. You guys take care and have a good one.